crypto market is in red. It's a volatile day here. So if you are here in this market and you're looking to make money as an investor or a trader, especially inside this cryptocurrency market where the manipulations are so high, you should know this and adapt to this situation, because those who are successful here as a trader or an investor, short term, medium term, or long term, that particular guy has understood this and mastered this. So if you are here, you're looking at this chart and asking like, okay, what can I really look from this, understand from this, and try to avoid? Now, it is in general a normal chart, this K and C, and when you are looking at this, you can see like different patterns. And one thing which is common about all these patterns is that they are all kind of bearish. Fine. Afterwards, when you zoom in and you're trying to get more details, you kind of get a little bit more information from that. All of those actually suggest a break to the downside, a bearish pattern breaking to the downside. Fine, you go through the moving averages. Now your indicators also show you something. Fine. And when you actually try to gather more information on these, you kind of see something more to it. Now, this is one asset, right? Now you go into different assets, good old days of our XRP, and you try to put more information inside that, and you get that day. Now, as you move around to various assets, this is Ether, you get similar ideology there. So from the, now, not the exact bottom, close to the bottom, towards close to the top, there's like a 20x to gain. But if you are inside this market trying to trade on short term, what happens? All of this comes in between. And if you are not aware of these, it's really hard to even hold the same amount of tokens to the upside as the market go back up. Right now, the market is 20% down. Your RSI is closing to 40. So there are things to be known. So in general, when you are looking at market, it's really hard to understand like what to do, what not to do. But this thing is going to be common. Now, what is it, right? We're going to break that into detail. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. So as we look at this, we do get that point and we understand like, okay, markets show you a bullish trend, which is starting lower, ending way higher. Great. But in between, you get all these bearish patterns, which break to the downside. And one thing in common, it's like most of them actually drop like 20 towards 30-35%. One exception, which I see, is for Ether. It starts from like 14-15% all the way up to 35, close to that, right? Now, if you actually come back into this and ask that question like, okay, what happens if you are in this market? Should you be taking or trying to take somewhere close to the top and trying to buy at the bottom? Repeat that again and again and again. You make more money. Is that how it works? If you can literally do that in practice, yes, that's how it works. But that's not how the market works, right? Unless you are a bot, it's not how the market works. So as a human being, what you need to understand here is that the market goes up. It will be hard for you to get the exact top. The market's correct back down. It'll be hard for you to get the absolute bottom. So what happens? If you are missing the top and you're missing the bottom, now understand this is like just 20% drop we are talking about. And you miss some at the top, some at the bottom, and you have spread when you're selling, you have spread when you're buying. So eventually, if you're lucky, you're in green, you start, say for example, here with 100 units, and at the top, you end up with 101 units if you're really good at it. But for the majority, what happens is when they try to execute this, they start here with 100 coins, but by the time they reach here at the top, it's like 95 coins. The dollar value went up because the market went up, but you didn't actually get the maximum benefit because you were trying to trade. So one thing which you are looking at the current price action is that, okay, we are moving higher, we are close to the resistance. What happens usually? These bearish pattern break down, great, but these are not down trend. It is a correction inside this bullish trend. So if you are going into different assets, you see something similar, just the pattern or the price structure is different. Here, this is Ether. It has these same patterns, which are like bearish patterns. And sometimes it actually breaks to the upside, showing you extra bullish momentum. But mostly it actually breaks to the downside, like 30% on average. And you kind of get the idea, like the market actually suggests when it is tipping, right? The market actually gives you that clear detail. So when it is about to break, it kind of gives you an idea of what it's about to do. But what you are looking there is for how much it actually dropped. So when you go back into these, say a similar chart time frame, and you actually try to measure like how much it dropped, something changed here, right? Previously, we were talking like in between, when you are continuing to the upside inside that trend, you get these corrections around 30-35%. But when you're observing a 60% drop, now that's like, okay, something just changed. And when we go back for the retest, take your profits. Fine. So when you're going back up here, somewhere close. Now, it's really hard to get the top, but assume that you got somewhere close. So better take your profits. Now, we were doing this, right? On Ether especially. As we were going up, we were taking profits. Each time we are going up, we were scaling out of this asset. We didn't get the exact top of 4,300. Agreed, but we made sure that we exited all the way to the upside. Great. Now, if you're in an asset and you're looking at the market like this, okay, it is breaking through the moving averages on a daily chart. RSI is breaking down, it's going down with a huge momentum. What should be you careful about? Because if you're trying to step back and then drop a line, you kind of get this idea. Okay, you broke above, you're still above that, there's going to be a retest, most likely close to like 21,500, 21, that range. But right now, you see that the price is close to that, flirting with that level, all that is happening. But the RSI is still below that trend line support. Now, on a trend line basis, yes, it is below that. But if you understood here that the market do these volatile stuff inside that bullish market, what you are looking at is something like this. The price had made a lower high, agreed, minus 20%. But at the same time, if you look at the RSI, it made a positive step, a higher high, giving you like 24% to the upside. So here the price was like down 20%, and here it showed you something higher. So the momentum is shifting there. So if you are in this market and you're going to get a double bottom, that's going to be one of the most best scenario. But it's going to be really hard to pick the absolute bottom of this retest. But if you are here again, what do you understand? If you buy here, just go on, continue until the price actually shows you like a bubble territory. It's really hard to understand where the bubble territory is. But one thing which is common here is like, say, for example, you're looking at this. The number of days taken to come to the downside. Say you take 1, 2, 3, 4, 5, 6, 7, 8 days to come to the downside. Fine. Afterwards, 1, 2, 3, 4, 5, 6 days, you reach another top, which is a higher high. So if you were selling here, because the market is breaking to the downside and moving to the downside, you lost. Again, the next time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you reach a bottom. But when you're going up, what happens? 1, 2, 3, 4. Fourth day, you made that top. So during these bullish trend, when a bearish pattern is breaking to the downside, the number of days taken to come to the downside gives you an idea of how early you can actually go back up. So putting that into perspective, there is a huge possibility that this is where we are going down. Fine. So that's 1, 2, 3, 4, 5, and 6 days already. So maybe 1 or 2 more days here at the bottom consolidating. So that gives you an idea of, okay, most likely within the next 5-6 days after this correction, we are going to go back up. And if the history repeats, that's how these markets work. Now, on the fundamental stuff, yes, there is a lot changing. Now, on the market side, on the technical side, we kind of get one thing. If you are really good at picking the top and bottom, okay, you can continue whatever you were doing, unless the market actually gives you some surprises. Fine. But as a normal human being trying to trade in this market, one of the best thing for you to do here is to try and avoid one of these dips. Now, you can be in this market, but what happens is like the market doesn't actually always work that way. If you consider this as the trend line moving to the upside, you can say like, okay, the market actually go like this, go back up, come back down. It actually does all these cycles. So if you are here, you entered somewhere here, great. The price went down, agreed, you are in a loss, you are in red, but the price will eventually go back up. So when the price go back up, if you didn't take profit here, you missed the top, and then the price is coming down, your emotions are so high, you're selling. Now, even if you sell here, that happens to be something in green. Fine. Now, the market actually does similar stuff. If you buy here and then again the market goes back up, it does the correction, it goes back up. So each of these corrections, if you can see in this manner, then your portfolio won't get hit hard. Now, on the fundamental side of this, what is really important is to look at how the volume is changing. Now we can actually see that the volume is increasing, and as I've been updating in grand detail in the Patreon, there's a lot of stuff if you can understand from the on-chain details. So here it is showing you that this is from today, right? It is actually showing you illiquid BTC is now increasing, and that's one of the largest increase on a weekly for last 52 weeks. So that is really important for you to know. That's not moving, it's still there, and highly liquid is really low compared to what you are looking at. So the volatility which you are seeing, the short-term volatility is created by these short-term traders. The long-term guys, they are solid, they are buying, they are holding. Whether you are Bitcoin maximalist, whether you are Bitcoin fan or not, that is fundamental, showing you, okay, the guys who are buying, they're holding for long. Now, if we actually take a different direction, there's something coming up. Now, this is okay, you do understand this, but what I'm actually about to show you is like, not everyone would be agreeing with that, but just to show this, okay, this is for climate change. They're encouraging you not to buy any petrol and diesel vehicle because they're not going to give you a loan for that. Fine. And the other side of this, I'm like, okay, this. Now you can make whatever you feel with this, but again, the climate change is the highlight here and here. Okay, so that actually gives you some idea. You can make whatever you want. But on the other side, when we are moving out from that sector towards crypto, this again is really interesting. Bitcoin has been taken off exchanges in past 24 hours. So that's Bitcoin moving out of exchanges. So if you understood the on-chain metrics, now you're like, okay, people are not coming into the exchanges to sell off their Bitcoin, whereas they are moving it out of the exchange. So if you go back into this one, you look at this highly liquid, people moving in, selling, buying, that kind of stuff, and liquid one compared to those who are holding, it's clear that what really is happening. Fine. So you get that point, like, okay, it's not more units coming into the exchange to sell, or it's not more units coming into the crypto to fiat exchange to move into fiat, right? They're still in crypto. They are waiting for a buyback opportunity. If you're looking at Tether, you see that the volume went up. They are not moving into fiat. They are waiting on a stable coin to get back into the market. So say some of these are actually short-term traders trying to reposition themselves, and the market volatility is going to be always there. But eventually when you're coming on to the fundamental side, this really looks good for me. Like, okay, this is interesting. The status quo or the traditional banking system is actually now looking at this new technology to incorporate into the existing stuff and make money. And on the other side of the world, when we are talking about a quantitative tightening, this really is happening. And I'm surprised actually, but you need to understand, like, okay, they're trying to balance here and there without letting the economy collapse like a house of cards. They're trying to balance it and slow down the inflation, which we kind of get the point like, okay, it's going to be really hard. So a soft landing was never promised, at least if you understood the market. But right now, if you're looking at this is going to be crazy. The housing market is going to be red hot and going to be really crazy. So here, again, back to the US. US mortgage lenders are starting to go broke as the loan volumes plunge. So you connect both of these and you're like, okay, the sales went down, the demand is going down because your interest rates are high and the prices are dropping, people are scared. So this really is happening. Now, on an entirely different note, we talked about this last time, right? This can do really bad stuff. If that really is happening, that's so bad. Now, moving on to the dollar. We talked about dollar yesterday, saying that it's going to go back up slowly, test this resistance because it is showing you a higher high and a higher low in terms of the price, right? One here, one here. So you got higher high, then the lows here and here. So you're trending up. But the RSI suggests to you that it is the opposite. You don't get higher high, you don't get a higher low. So the chances of the price coming back here, testing the top and then dropping for a short-term correction is still valid, and then it may actually consolidate before it continues higher if the macro situation remains the same. And the S&P 500, the Dow Jones, the stock market is still there. With that being said, individual stocks are trying to stay above the breakout and continue. Now we'll have to see how next week starts. But right now, if you are looking at these, like the commodities, it's actually being sold off. So the commodities are coming down, down, down. There would be a retest of this break, and then it's going to come lower. So as the commodities price comes down, one thing which is going to be good for you, me, and anyone out there in the market is like the stuff which you see in your grocery store or your supermarket is going to be a little bit less expensive in coming months. But again, if free money is being injected into this market, inflation is going to come back or it's going to stay at these levels. So you're not going to see 2% inflation. You'll most likely see like 6, 5, 7% of inflation for another year. So if it really is serious about pushing the inflation down, they're going to kill the market. But before that, the short-term breathing room for the market may push the market back to the upside. So if you are in this market, one thing, understand the macro because that kind of help you to stay away. And then if you are in the trading side of this, whether it's short-term, medium-term, long-term, keep this in mind. If you avoid trying to pick this top and bottom at each drop, it is better for you in my humble opinion. Now, you can see another guy entirely different with an entirely different opinion saying, okay, go leverage, buy this bottom, pick the top, we can do that. Now it's entirely different game if you understand that. But if you're entering there and starting to get one, you win one, you lose three, now it's done. Your portfolio is wiped out. Because if you go back into this market, I've actually saw like one tweet today, like, the number of people getting wiped out or liquidated in this market is increasing. So I'm literally there for you saying like, okay, if you do understand what's happening in the market, there can be possible downside, short-term downside, and then you go back up. So which actually ties back in with what Raul is actually saying. He's like, okay, that literally for me is not only Raul saying this, one of the quote from Peter Lynch. I repeat that, right? If you expect this asset to do from 15 to 24, that's good. And if it drops during that time when you're investing to $8, $6 now, it's an exceptional opportunity. And that's something what he's actually giving you the theme here. So when you actually go back in the market, look at the entire market and ask that question to yourself like, okay, are you ready for this? Because this may not be something you are going to look at because all these countries are trying to hike and you see somewhere it's being cut. The inflation is starting to ease in an area for the central banks, but the common man doesn't actually see that the prices are going through sky, but they can't actually push the economy more, it will break, right? So if you are here and if you are receiving value, please do hit that like and subscribe button. If you have any suggestions, you can drop me that in the comment section below. I'll meet you guys on the next video. Bye for now.